This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Turnaround Tuesday. Stocks rose sharply for the first time since the surprise UK referendum. As many now say, the fallout may be limited. Record settlement. Volkswagen agrees to pay $15 billion to settle charges it cheated on emissions tests. But that may be just the beginning. Making every dollar count. You can't control the market volatility, but you can control your finances. The best ways to build a budget, save, and manage your debt. Tonight on Nightly Business Report for Tuesday, June 28th. Good evening, everybody, and welcome. I'm Sue Herrera. Tyler Matheson is on assignment tonight. Bounce back. Stocks climbed for the first time since the UK's surprise decision to leave the European Union, and the gains were strong across the board, even as traders tracked explosions late this afternoon at Turkey's Ataturk airport, where, according to reports, 2 suicide bombers blew themselves up. As more details comes in, it's likely to be on investors' radar tomorrow as well. Today, by the close, the Dow Jones Industrial Average rose 269 points to 17,409. The Nasdaq added 97, and the S&P 500 gained 35. Bob Pisani has more on today's rally on Wall Street.
The markets bounced back today on a combination of oversold conditions, a bounce in oil, and the approaching end of the quarter. The volume was on the heavy side. That's a good sign that there was some buying interest after significant drops over the prior 2 days. While the S&P 500 is down only 3% this quarter, broad swaths of the market have seen significant declines, including banks, restaurants, airlines, retailers, and many big-cap tech stocks. Microsoft, Apple, and Alphabet, for example, are all down double digits for the quarter. These were the groups today that led the rally. We had, for example, decent gains for airlines like Delta, decent gains for retailers like Nordstrom's and Macy's, and for banks like Bank of America and Citigroup. Many are expecting the banks to announce dividend increases and buybacks after the results of their stress tests are announced tomorrow after the bell. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Nike likely will not help the stock market tomorrow. The Dow component issued weak guidance and sluggish sales after the market close. The world's largest sportswear maker earned 49 cents a share, a penny better than estimates. Sales, though, rose less than expected, and revenue for the quarter came in at more than $8 billion, up about 6% from a year ago. As for the stock, it fell sharply in initial after-hours trading after the company reported slower growth in its future orders. Courtney Reagan has more.
The athletic wear company saw strong sales in some international markets, including Western Europe, Greater China, emerging markets, and Japan, while sales in the key North America market disappointed. Not only were North America sales light, but overall gross margin, a measure of profitability, fell in part due to a clearing of excess Nike inventory in the region. Nike footwear showing the strongest growth in North America by category, with apparel sales growth not far behind. Equipment was the worst performing category in the region. Orders made by retailers around the world for delivery of Nike products between now and November also coming in shy of expectations. For Nightly Business Report, I'm Courtney Reagan.
And now to Europe, where there were boos and there were heckles. Tensions within the UK spilled over into Brussels, where European Union leaders met for the first time since the United Kingdom's unexpected vote to leave the bloc. The goal of that meeting is to prepare for the UK's divorce from the EU. We have 3 reports tonight. We begin with Wilfred Frost in Brussels.
Today in Brussels, leaders of Europe's 28 nations met for the first time since last week's historic Brexit result. It was also the final EU summit to be attended by UK Prime Minister David Cameron after he announced he was resigning. On arrival, his comments were positive and forward-looking as he attempted to heal some of the wounds that have been opened in recent days. I also got a chance today to catch up with the leader of the UK Independence Party, Nigel Farage, who, it must be said, did somewhat steal the spotlight from David Cameron, and I asked him how significant an event last week's victory had been.
This was the little people, ordinary people, standing up against the multinationals, the Goldman Sachses and big politics and getting a victory. Big news.
I also asked him whether his own victory had implications for whether Donald Trump could win the US presidential race.
It's going to be, a fascinating electoral contest in America. I sense he may well win it because he may well get people voting that haven't voted for years.
If Mr. Farage is right, then Secretary Clinton may need to be worried despite recent poll leads. For Nightly Business Report from Brussels, I'm Wilfred Frost.
Back in London, thousands took to the city's Trafalgar Square to protest the outcome of the vote and to show their support to remain a member of the union. Sarah Eisen was there.
We want in, we are Europeans. These were the chants of thousands of people that gathered in London's Trafalgar Square today and then marched here to Parliament. They're here with a message of solidarity with the European Union. They are here to protest their country's vote to leave it.
Almost half of the country is just dumbfounded by the result and the lies that we've been told.
It's just frustrating that we've isolated ourselves. We've become quite reclusive against the European Union and Europe itself. We are still part of Europe, and we need to emphasize that.
Demonstrators also had a message for Boris Johnson, the former mayor of London who led the campaign for Brexit and is the current frontrunner to be the next prime minister of this country.
Boris needs to go. He cannot be our next prime minister.
Whoever succeeds David Cameron faces a divided United Kingdom. Little more than 48% of people voted to remain in the EU, while more than 51% voted to leave. Many that wanted to remain are here in London and are a younger millennial generation. They feel that their identity is European. Those who voted out feel their identity is British. And above all the issues in this referendum, the economy, immigration, sovereignty, the identity is really at the heart of it. For Nightly Business Report, I'm Sarah Eisen in London.
Now to Asia, where those markets stabilized overnight on the prospect of greater monetary and fiscal stimulus. Eunice Yoon reports tonight from Beijing.
Markets have calmed and in many cases strengthened across Asia because of a lot of talk of policy support. In Japan, there was already discussion about greater fiscal stimulus to the tune of $100 billion in order to prop up the economy there. And it seems as though the Brexit fears have only heightened the need. The economy minister today said that some of that money could be allocated to small and medium-sized companies that might be suffering after the Brexit. In Korea, the authorities there are talking about something similar. The government said it's considering a supplementary budget of $8 billion in order to offset some of the negative implications of a Brexit, especially in the export sector. Here in China, policymakers were out in force to try to assuage the markets. Even the Chinese premier himself made a statement at the World Economic Forum saying that Beijing would try to ward off any roller coaster movements in the markets. Investors are very much focused and concerned about the renminbi and the pressures that it faces. The expectations are that as investors look for more safe investments, the dollar is going to continue to strengthen. And that could mean that we could see a greater depreciation in the renminbi. Well, the Chinese central bank issued another statement today stressing that even though we're seeing weakness in the renminbi against the U.S. dollar, that it is stable against a basket of currencies. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Volkswagen's emissions cheating scandal will cost that automaker about $15 billion. That's a record. As part of the settlement, almost 500,000 owners of diesel Volkswagens here in the U.S. are finding out how much money they'll be offered for driving defective models. As Phil LeBeau reports, the compensation is part of a huge agreement VW reached with state and federal regulators.
Volkswagen is paying a massive price for years of deceiving owners of diesel models about their cars' emissions. Volkswagen's settlement of civil charges totals $14.7 billion, with up to $10 billion paid to owners of diesel cars. There will also be hefty sums going to the EPA and to develop zero-emission vehicles to offset the damage of VW models that broke pollution laws.
You can't suck the NOx out of the air, but what we can do is offset that damage by reducing pollution from future sources.
Owners of defective VWs will be offered up to $10,000 and the option to keep their car and get it fixed or sell it back to VW at its value as of September last year. So if you take the buyback option on a 2010 Jetta sedan, you would get between $13,675 and $15,350. A 2015 Passat sedan owner could be paid just over $32,000 after selling their car back to Volkswagen.
I think people are getting as much or more money than they hoped or expected out of this deal, and I think they like the option of seeing what they want to do as opposed to being forced into one kind of pathway.
While the settlement is a huge step for VW executives grappling with a costly crisis, the reality is this scandal is far from being resolved. The Justice Department is still conducting a criminal investigation, and VW still needs to finalize how it will fix diesel cars parked at dealerships. And the brand is still struggling to win back buyers in the U.S., where sales are down more than 12% this year.
The first compensation checks for defective diesel models could be cut this October, with one VW owner telling me, "I'm taking the cash and leaving the VW brand for good." Phil LeBeau, Nightly Business Report, Chicago.
So let's turn now to Jack Narad for more on VW's record settlement and what lies ahead for that company. He is executive market analyst at Kelley Blue Book, and he joins us now. Good to see you, Jack.
Hey, great to talk to you.
Good to talk to you, too. Let's start with where Phil left off. He talked to a person who said, "I'm taking the money and I'm leaving the brand for good." How many customers do you think will leave the VW brand permanently?
I don't think as many as maybe others would guess. The consumer generally has a pretty short memory on this. Plus, there is a lot of churn in the industry anyway. So there isn't that much customer loyalty to a brand to begin with. With a brand like Volkswagen that is not a major brand in the United States, even less so. So I think there will be probably about the normal amount of churn when we look back at it 2 or 3 years later.
You know, talk to me about a company who makes a legitimate mistake in manufacturing and one that tries to deceive. I mean, they're two very different things.
Well, I think that's the big difference between this scandal, and it really is a scandal, versus what has happened before with recalls. I mean, what we have seen with recalls is there's legitimate, we at least believe they're legitimate, mistakes made, equipment not living up to standards, those kind of things, and they've resulted in some rather terrible results, you know, fatalities, injuries, terrible, terrible stuff. What we have with the Volkswagen thing is something far different. No deaths have occurred because of this, but they intentionally cheated and they admitted they cheated. And I think that's the major difference between this scandal and other things we've seen similar to it in the past.
What about the price tag that they are agreeing to pay? To a certain extent, is that kind of a shot across the bow of other automakers saying, listen, learn from what's happening to us?
Absolutely. I think that's very precisely what's going on, and it's good analysis. The EPA, NHTSA, they don't want this to happen again. They want to avoid this at all costs. So these damages are very high. These are hefty fines, hefty amount of money going to change hands here. Quite a good deal, actually, for the Volkswagen owners right now. And I think, exactly as you described it, it's a shot across the bow of other manufacturers.
Very quickly, in the few seconds that we have left, the pending criminal investigation, that is another chapter, is it not, that VW is going to have to face?
It is, and it's a big issue because there has been kind of admissions by the highest level of Volkswagen of wrongdoing already. So it's kind of hard to walk that back. It'll be interesting to see if criminal charges are actually levied. We rarely see criminal charges in this kind of situation. And of course, in this situation, too, no deaths have resulted. You know, certainly damage to the air quality has resulted, but we'll have to see how that pans out.
All right. I'm sure we'll be talking to you again in that case. Jack, thank you very much.
I hope so.
Jack Narad with Kelley Blue Book. Still ahead, Donald Trump trashes free trade and says he'll rewrite the rules currently in place. The U.S. economy expanded more than previously thought in the first 3 months of the year, but that pace of expansion was the slowest in a year. Gross domestic product, the broadest measure of goods and services produced across the U.S., grew at an annual rate of 1.1%. The Commerce Department had previously estimated first quarter growth at 0.8%. The economic bright spot has been housing, and today we learned that home prices continued to climb at a pretty steady clip in April. The S&P Case-Shiller Home Price Index rose 5%, slightly less than the gain in March. The hottest markets in the country are on the West Coast. Portland saw home price gains of 12%, Seattle nearly 11%, and Denver 9.5%. And consumer confidence is rebounding. The Conference Board's gauge of consumer confidence climbed to its highest level of the year in June. That bodes well for household spending. However, the survey was conducted before the United Kingdom voted to leave the EU. Donald Trump targets free trade. In a speech in Pennsylvania, the Republican Party's presumptive nominee took aim at globalization, saying it has made the financial elite very, very wealthy, but has left millions of workers behind.
NAFTA was the worst trade deal in the history. It's like the history of this country. And China's entrance into the World Trade Organization has enabled the greatest job theft in the history of our country.
John Harwood following the story from Washington. Good to see you, John. What else stood out in Mr. Trump's speech today?
So what was extraordinary about this speech was that you had the Republican nominee, presumptive Republican nominee, making a speech that Elizabeth Warren or Bernie Sanders or a labor union chief would be very comfortable giving, saying powerful corporations had rigged the system, it's been a catastrophe for American workers, saying he was going to remove the United States from the Trans-Pacific Partnership and pull out of NAFTA if it couldn't be renegotiated. Not something you normally hear from the party of business.
Yeah, certainly not. What's the, is there a chance that that strategy could work?
Well, you would think it could work, Sue, if he had solid support among Republicans, because it would be a way of reaching out to blue-collar workers. Those voters are what he relied upon in the primaries. But he's got shaky support within his own party. 75% of Republican members of Congress in 1993 and in 2000 voted for China into the World Trade Organization and for NAFTA. So he was targeting his own party. He can't afford to lose big chunks of his party as he's trying to catch up to Hillary Clinton.
Now, speaking of Hillary Clinton, what was her message today?
Well, she did a very stark contrast. Donald Trump was talking about reviving manufacturing in the United States, bringing the steel industry back. She was talking about the future. She was talking about technology, saying she wanted to expand computer education for every child, and that's where the global economy was demanding talent from U.S. workers. So he's focusing on making America great again, which she said is code for the past. She was talking about the future. Usually politicians like to be on the grounds of the future.
You know, John, there was an interview that Wilfred Frost did earlier today with the head of the Independent Party over in Britain, who predicted that Mr. Trump might win because he will motivate those who have not voted before or feel disenfranchised and have stopped voting. What do you make of that comment?
Well, certainly Donald Trump's support and his message flows in the same direction as the Brexit campaign. But a couple of significant differences. First of all, a presidential election is a choice between individuals, not an idea, like a nationalist idea of pulling out of the European Union. And secondly, Britain has a much wider electorate than the United States. And since a lot of the driving force behind these, both Trump and the Brexit campaign, is concern about immigration and cultural change, the numbers don't favor Donald Trump as much as they did Brexit.
Interesting, to say the least. Thanks, John. Good to see you again. John Harwood in Washington. The gas tax may be going up in New Jersey. The state assembly voted to approve a 23-cent gas tax increase and a 1% point sales tax cut. If approved by the Senate and signed into law by the governor, the gas tax will go into effect on Friday. The funds raised will replenish the state's transportation fund, which is expected to run out of money this summer. Profit soars at Carnival, and that is where we begin tonight's market focus. The results were better than expected, and that helped in part by lower costs. Overall revenue also increased at the cruise line operator thanks to higher ticket prices and an uptick in onboard spending. The company also launched a $1 billion share buyback program. Shares of Carnival up 9 cents to $43.73. Barnes & Noble Education reported a narrower than expected loss for the latest quarter as better than expected revenue helped lift results. The bookstore chain also reported improvement in same-store sales growth thanks in part to strong demand for graduation-related merchandise. But shares still fell more than 1% to $9.42. Dow Chemical is cutting some 2,500 jobs worldwide as part of the chemical giant's recent deal to take over its silicone joint venture with Dow Corning. The company said its restructuring efforts will also result in the closing of silicone plants in North Carolina and Japan. Shares of Dow Chemical fell 2% to $48.50. Whirlpool said the recent Brexit vote will not affect the appliance maker's earnings for the year. The company reaffirmed its outlook, saying it will continue to keep an eye on foreign operations and will take swift action to offset any negative impact stemming from the Brexit decision. Whirlpool shares rose 4% to $161.4. And General Electric will sell the majority of its restaurant franchising financing assets to 3 buyers in transactions worth nearly $1.5 billion combined. The deals are expected to close in the third quarter of this year. Shares of GE up 2% to $29.94. Coming up, when the market feels out of control, there are a number of things that you can do to stay in control and make every dollar count. Here's what to watch for tomorrow. The Federal Reserve will release the second set of results from the stress tests, which will determine whether a bank can increase its payout to shareholders. Pending home sales, which are signed contracts to buy existing homes, will give us another look at the spring selling season. And members of the European Central Bank meet to discuss the economy following the Brexit vote in the UK. And that's what to watch for on Wednesday. Speaking of Europe, the European Union is reportedly set to file a third set of antitrust charges against Google, this time over advertising. Google was first accused of manipulating search results to favor its own products. The EU then alleged that Google forced Android manufacturers to default to Google Search. And now, according to the Wall Street Journal, the issue is whether Google prevents website operators from placing ads that compete with Google's own advertising business. The ride-hailing company Lyft has reportedly hired a boutique investment bank best known for helping tech companies find a buyer. As first reported by the Wall Street Journal, Catalyst Partners has contacted automakers and other companies about acquiring a stake in the startup. It's unclear, though, whether Lyft wants to sell itself or to raise new funding. Well, unfortunately, as we know this week, there's nothing you can do about the political drama unfolding in Europe or the fact that some of your investments may be in the red. But that doesn't mean your finances are completely out of your control. Sharon Epperson is here with some tips on how to fix your own mini economy, otherwise known as your household budget, right?
That's right, Sue.
Good to see you, Sharon.
Good to be here.
Let's start, first of all, with we talked about creating the right portfolio mix last night in the wake of the financial turmoil that we saw. But let's drill down a little bit more. One of our viewers tweeted us, and this is what they wanted to know, asking if we could take a step further and explain how someone can better manage their expenses, their own little mini economy, their budget.
Well, I think that's a really great question because what we can do in the midst of any market turmoil is focus on what we can control. And there are a couple of things that you can fix or that you can make sure that you stay on top of. One of them is keeping your job. Make sure that you keep your job and make sure that you are spending less than you make and saving more than you think you need, because you're probably going to need more in that savings account than you think you need.
Yeah, I would think so, especially with what's going on in the stock market. So we understand the 3 steps to controlling your money a little bit better. Right. But the budget is part of that. So, you know, I know it's different for everybody, but what does an ideal budget look like?
Well, there's many rules of thumb out there. One that I like to follow that's very simple, and to keep it really simple, is something that Fidelity has put out, and they call it the 50-15-5 rule. And you divide your money into basically 4 parts. You put 50% of your money in for essential expenses, and that includes your housing, that includes any bills that you must pay on a monthly basis, and then make sure that another 15% of that money goes to retirement savings. That can be your contributions and your employer's matching contributions. The other 5% should go to short-term savings, and keep in mind this is to build up that 3 to 6 months worth of emergency savings, but also if you already have that, you want to make sure you have money saved for short-term expenses, like if you want to save money for a vacation or if you want to save money for a car over the short term.
Right. Speaking of that, you know, that 50% that's essential expenses. A lot of people want to know how much house they really should buy.
Right.
Like, what's the ratio between what you make and what your mortgage payment should be or your car payment should be?
Well, there's another good budget that Savvy Money has come up with that's a really good one to follow, breaks it down even further. And there you put about 35% of your pay into housing, and that is your mortgage or your rent, your utilities, everything it costs to pay for that house, to live in the house. Then you want to take the other 15% and put that to paying back debt, whether that's credit card debt or student loan debt, personal loans. 15% should go to transportation. That's where your car payments come in, as well as gas and other insurance, other things related to your car. And then you want to also keep in mind that you have to have 10% in savings. That's less than the other budget, but maybe more realistic for people. And the rest of it, 25%, other living expenses, saving for college, saving for other big ticket items.
Lots of saving.
Lots of saving. That's the bottom line. Lots of saving.
Thanks, Sharon.
Sure.
Appreciate it. Sharon Epperson. Before we go, here's another look at the day on Wall Street. The Dow rose 269 points to 17,409. The Nasdaq added 97, and the S&P 500 gained 35. That will do it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, and we'll see you here tomorrow.